Hey, welcome back to Innovate Africa. Now, innovation is the game, you know it, it's about impact, and we focus on African businesses that not only deliver impact, they also enable impact. Some of them do both, like the next company we're going to chat about. When I say Experian, sometimes you'll run, hide under the bed because someone's going to check your credit record. No, I tell you what, since 2020, this company has done I wouldn't say pivot. I think the way they've positioned themselves since 2020 has been absolutely phenomenal. They've become a data company, and that has enabled them to tell really interesting, insightful stories, especially if you're a CEO of a big company, medium-sized company, for example. So without any further ado, I'm going to introduce you to Jaco van Jaarsveld. You're the Chief Innovation and Strategy Officer at Experian. Wonderful having you on the show.
Thanks, Gino, and a pleasure being here. Thanks for having me.
It's always lekker chatting to you, waxing lyrical. Let's talk a little bit about Experian, the business, and where it is today. I think people understand the context of Experian, but since 2020, you had a new CEO. He put you in the position as strategy and innovation lead, right? And
Yep.
today you're telling great stories. So what does the business do?
Yeah, so you hit the nail on the head there. The initial thought when people hear the name of Experian, it would be the credit bureau that has your credit bureau report, your credit score, and the entity that credit providers would typically go to in terms of assessment of access to credit. So it's the whole credit story. But as you said, 2020, and actually globally before that, we pivoted as a business to go, well, we sit on so much data that if we take the data that we have and we add additional data insights to that, we can build insights on consumers, whether it's profiles of specific subsegments of consumers or just general insights at a product level that will enable more inclusion from a consumer perspective, number one. Number two, we then along the journey realized that if you add other components of data, you can have a different view in terms of risk profiles or response profiles of consumers, which will create a more inclusive financial economy. So around that journey, we then got to the South African business looking at what is it that we need to do as a business? And our ambition as a business is to create a more inclusive financial economy for all South Africans. And in order to do that, you have to use data in an innovative and a dynamic manner in order to create value propositions from data that drives inclusion. And that's the business in a nutshell, pivoting into a data business and using data to the benefit of the consumer and the MSME.
This excites me because post-COVID, I mean, we all know what happened during COVID. I'm not going to bore anybody with the story right now, but a lot of people's net worths, their credit scores took a significant knock. And as much as people say, oh, don't take credit, it's a bad thing, credit can be good if you're trying to build a business. If you use credit responsibly, you certainly can. But a lot of people are left out of the loop. So what I'm hearing from you is, on the one side, credit inclusion, which means you open this net a lot bigger. You're using alternative data to get better insights into how people are spending their money, how reliable they are. But on the other side of this particular fence, I'm also hearing that if I am a CEO of a big company, you've got all this behavioral stuff tied up. You segment it. You can tell me which customers are going where because of what. And we'll get into one of those stories. But let's start with credit inclusion. Explain to me, and to a layperson out there, even some CEOs who hear this sort of phrase, this catchphrase, right? Credit inclusion. What is it, and how are you going about achieving that as Experian?
And that's the most important thing. And the easiest way to explain these things is by giving real life examples and telling stories, right? So unfortunately, as much as you're avoiding going to pre-COVID, I'm going to go to pre-COVID.
Good.
So if you think about credit and access to credit pre-COVID, we looked at it from a pre-COVID and post-COVID perspective, and we looked at about 150 million credit accounts for about 30 million credit consumers, and we looked at where they started their credit journey pre and post-COVID. And it was very interesting. It was all aligned with the National Credit Act and the inclusion of affordability, for instance, as a metric in order to determine credit readiness and credit worthiness, right? So we looked at that and we said, well, if you look at every 10 consumers that start the credit journey, 4 out of 10 of them started with a retail store card, 2 out of 10 with a micro loan or a personal loan, and the other 2 with another credit product, whether it was a telco product or anything of that nature. But the majority, 40% of people started with a retail store card. Now, initially people would consider, well, that's bad because retailers shouldn't be granting credit. But of that 4 out of 10 people that started with the retail store card, more than 70% went on to banking and 30% onto secured lending products. That is wealth creating, right? So the net result of that piece of analysis was, in order to get people into the credit funnel, you need to create a mechanism for people to start a credit journey, and retailers filled that gap brilliantly.
Yeah.
Enter COVID. Retailers stop trading, close the stores, can't get to malls, very quickly have to pivot onto digital, which is a conversation for another day. But that supply and that flow of credit through retail into banking disappears.
Right.
Now, typically what happened with the banks pre-COVID was they would let the retailer book the account, small limits, short terms, and as the consumer pays, the limit goes up, but it's generally under R1,000 limit that consumers would start with, and they'll build up their credit journey and they'll progress into banking accounts. What now happened is retailers post-COVID got to the point where they do not provide credit at the same levels they did before. During COVID, they sure did, and the flow of credit into the banking world disappeared. And now the banks have to think differently. Now the banks have to go, the bank has to be the source of credit. But if you take the difference between a bank and a retailer sits on anything between 30 and 60% gross margin, so they can fund losses on the credit book. The banks don't. The margins are fundamentally different and lower than a retailer, and therefore they need to think about it differently. And immediately post-COVID, what banks defaulted to is they started lending to existing known customers.
Sure.
So customers they knew, or customers when applied that had a credit relationship with another bank or another institution,
Sure.
and they kept lending to that subpopulation. And there was the occurrence where you and I and most people on the show would receive these messages or emails, or was it SMSs or whatever mechanism of, you qualify for another credit card, you qualify for a personal loan.
Yeah.
But the difference between pre and post COVID is these limits weren't a 50,000 Rand or a 20,000 Rand credit card. It was 200,000, 150,000 Rand limits, because they targeted the cream of the crop.
Yeah.
And what happened, and that small population got lent to significantly post-COVID, and that is the most distressed subsegment of the market today. The market that's your most affluent, that is in that position because they've been overlent. And because of the flow of new credit that came normally sourced from the retailers isn't happening anymore.
Right.
And now you've got this mismatch and the overlending to existing consumers, where we're now forced into a situation to think about this very differently. How do we get this credit, the sudden credit excluded because retailers aren't lending anymore, back included? And that's where this thinking of how do you use alternative sources of data to create inclusion? And that required a pivot to, well, in order to drive the inclusion journey, we are going to have to look at different sources of data and convert that into metrics that could include more people into credit that's different to the traditional old credit way only.
I will not say anything about banks right now. They will tell you that they work in a heavily regulated environment, which is why they need to be as careful as possible. I totally understand that. Some banks take it to the extreme. We won't tell you which bank. Others are a little bit more lenient as far as that is concerned. But Yaku, alternative data, so where do you get that alternative data from? And I'm going to be, as you might know, I am the co-founder of Innovation City in Cape Town, and we've got a R1 trillion worth of market cap corporates here, but also some really, and Experian being one of them. And but we also have some really innovative businesses, scale-ups, high-growth startups. And I think let's pick it up there, because you found 1 or 2 businesses in Innovation City that's giving you that alternative data that you can use. Just take us through that.
And I think before we get to the companies that we found that is incredibly innovative and generates data, it is the consent of that data that comes from the consumer, right?
Yeah.
And I think the key thing that we need to understand with alternative data, and alternative data can take any form. It could take access to bank transaction data, banking transaction data. It could be prepaid telco data, any form of data that's not typically available on the credit bureau. So data that's on the bureau is your credit behavioral data, your credit payment data, etc., that from a regulatory perspective must be shared. But there's sources of data like transaction data that's not on the bureau. Now, when you look at that data and how the Bureau gets access to that data, which is incredibly, incredibly predictive in terms of a person's ability to pay. And that ability to pay is very clearly picked up when you look at transaction behavior, to the actual transaction data that goes through your account. Think your bank statement. Every single thing that you swipe or tap your phone or swipe your credit card, anything that you do, that data can be used to determine cash flow, can determine, can you afford additional payments? Are you paying if you take that and you add it to your credit account, or if you don't have any credit data on the Bureau already, just that transaction data is incredibly powerful in predicting a consumer's behavior. Now, consider you get this data from all banks and all products in one space. You categorize the spend, you get a pure transaction view or cash flow view of a consumer, the value in that data. It comes to consumer consent. Now, let's be honest, you and I, and probably a lot of people that's watching the show would go, there's no way I'll give you access to my bank transaction data. We're not solving for us. We're solving for millennials and Gen Zs. Millennials and Gen Zs gives any data away to any YouTube and any TikTok channel out there. For them, they see value in data. They see value in the benefit of the data as to them. And that's the market that we're solving for. Sure. That's the future of this economy. That's the future of growth. And when you look at the solutions and the interesting partnerships that we've made at Innovation City and the great companies that sit here, it is millennials that's solving for millennials and Gen Zs. And that's the value here. And they don't try and solve the big picture. They pick the gaps and they fix the gap and they address the gap. And through that process, they unlock through that engagement with the consumer, because they're solving for themselves, just on a bigger scale, and they're unlocking the value of collecting that data. And what we then do with them is, as startups, we will come, have a look at the data, see how that data can be added to the aggregate big scale data, and how do we then use that and that consent with the data to build different metrics to then scale their business, but also through the scaling of their business, create more credit access by using the alternative data. And where we are powerful as a company is we're fully engaged and integrated into the banks and into the financial institutions and the credit institutions. And therefore, when we build these value propositions, these new alternative ways of assessing risk or assessing credit worthiness, we can prove that it is as good as the old mechanisms or the old methodologies, and therefore drive adoption at scale. And that's the partnership that we have with a startup. We can help them go from a startup to a scale-up with the distribution footprint that we have, using the great data that they generate.
That is phenomenal. So working with MSMEs, as it were.
Yeah.
Right? Just a quick one on the credit. And I know some people would be asking this question. It's one thing to encourage people to take out credit, but how do you take out credit responsibly? Even if your algorithms tell you that this person should be allowed to have credit, there's an emotional factor that needs to be taken into account when it comes to them having access to it, right? So how do you make sure that people actually spend responsibly?
Look, it's all about education, right? So another journey that we went on as a company is we started creating that direct-to-consumer and direct-to-MSE engagement platform. So we realized that we can be a B2B business, but if we're a D2C or a D2MSME business, it will fundamentally change that trust relationship, number one. And number two, we'll be able to educate and support consumers and medium and micro businesses alike to understand the environment they operate in. We know what the demand side wants or what the supply side wants. And the demand side, if we can educate the demand side and bringing demand and supply together in a natural way or a more aligned way, we address the inclusion ambition that we've got. So a lot of the focus that we do, especially again in the millennials and Gen Ys and Gen Zs, we go into the communities and understand what challenges they face. And it comes to education. And don't for 1 second underestimate the sophisticated understanding and the sophisticated nature of the township economy, etc. They understand that it's not in my humble opinion, if it wasn't for the township economy in South Africa and the informal sector, our economy would be in far bigger distress than we are. That is the heartbeat of and that is where success is going to come from. You and I agree. We've had numerous conversations on that, and it's maybe a conversation for another day. But when you look at the how do you solve for responsible credit? You have the conversation with the end user, and you say, what is it that you see as you need to responsibly access what you do to improve your financial well-being as an individual and as your family and as your business? And one of the most humbling experiences in my life is as a closet entrepreneur, as you know, went and developed an app, went to the township in Kayamandi, went to Diepsloot, and presented this. And have walked out of there within an hour with my tail between my legs, with a simple conversation with an individual that said to me, fantastic, looks great, but you're missing the point. And I'm going, no, I'm not. I've developed this app. This is what it does. He says, sir, you need to answer one question and one question alone. And you need to give me the ability as the applicant to answer the question, to my credit question, to answer it before I go ask it. Because my experience for applying for credit is every time I go in there nervous, I go in there anxious because I'm going to be embarrassed.
Right.
And embarrassed in front of people.
Right.
All you need to do is help me get the answer to that question before I go there, so I take the angst and I take the frustration out of it.
Clever.
I walked out of there and I went, we need to change this app, spent a bit more money, changed the app, and now what we're doing is we're literally building around that experience, helping the consumer and the MSME get to the answer before they go ask the question. So if there's any blockages in the way from you need to improve your credit score because you're not going to qualify, what do I do to improve it? Tell the consumer what to do. Tell the MSME what to do. If you need more documentation, get the documentation. If you're applying for cash flow support or you're applying for working capital, these are the type of questions and documentation you need before you go there. So help them get to a point where when they engage with a credit provider, whether it's an MSME or whether it's a consumer, that the question is answered, and that from a supply perspective with the banks and the financial institutions, it's also taking cost out of their process, bringing the two together. And to do that, data drives it significantly, because the more data the consumer shares, the more data you have, or the MSME shares, the more data you have to create that view and that behavioral attributes of a consumer, the cash flow of the business. And when you have that, you can turn that into value. You present that to the credit provider, and that takes the journey to a quicker conclusion.
Now, there's two things I want to wrap up with. These interviews don't go on forever. It's always fascinating chatting to you, though. The ability for you to help MSMEs scale, number one. Yep. I mean, you've got all the infrastructure to, empower these businesses to grow. And then the importance of the type of data that you have for corporates, smaller businesses as well, when it comes to the strategic decisions that they need to make in the market. So if you can do those in 3 minutes, it would be great. So your biggest challenge to date.
Yeah, absolutely. You know me. You and I can have an hour conversation over a whole day. But let me put it out there in terms of what we do. So we're not there to provide the financing. We're there to streamline the process in order to get to the financing, to match demand and supply. Right. And the way we do it, we use technology, and that technology is either just the data, where we will go into a big corporate like a bank's environment that they've got their own acquisition technology and they've got their own account management technology. And we purely provide the data as insights into their decision in matching demand and supply, where to a different level where we work with institutions that doesn't have the technology, that doesn't have the originations workflow, that doesn't have the account management workflow or the loan management platform, and we provide the technology as well as an end-to-end service. So as a company, we know that you can deliver a service to the big corporates, but in order to change the market and to make a material difference in the well-being of South Africans, you're going to have to create at least a minimum engine that provides an end-to-end solution. Right. And that solution needs to be affordable, and it needs to be delivered seamlessly through using the best capabilities with our data fully integrated. So from an Experian perspective, we have the two extremes where we provide the data, we provide the end-to-end service, including the data, in order for an entity to become a success, to lend, and then others to get money from that entity. So we provide the lending platform. A party brings the balance sheet, which is the capital to lend, and we match demand and supply through our underlying platform.
Now, the value to corporates is, and I think maybe we encapsulate it with a story if you're able to talk about this. There are different types of retailers vying for pole position. There's one retailer in pole position. But there was an event that happened which saw an immediate switch of customers from one to the other. Are you able to talk about that?
Yes, sure. I mean, there's this big narrative around what changes consumer behavior, and is it is it the retail brand, or is it the clothing brand, or is it the partner in the loyalty program? Let me be very honest with you, do not underestimate the power of a strong loyalty program
Yep.
and the partners within that loyalty program. And the example that you used that we shared at our recent Innovation Summit is we just did a bit of analysis in terms of transaction basket data, and we looked at consumer spend at retailers, both online and in store, and then isolated on online spending and looked at the volume of and the value of online purchases at the specific online food retailers, FMCG. So we looked at the 60/60s, ASAPs, Woolworths, the 4U at Spa, and we looked at the volume and value of spend.
Yeah.
And what we identified, as the market clearly knows, market information is clear, 60/60 rules the roost. There was an event where 60/60 and Pick and Pay, where 60/60 and eBucks parted, and eBucks joined with Pick and Pay. And the moment that happened, we immediately saw an uptick in ASAP activity on the back of that eBucks partnership. So our conclusion to that was that do not underestimate the strength of a very strong loyalty program that isn't just the FMCG retailer. There's fuel, there's your pharmaceutical partners, etc., etc. But that loyalty relationship with the bank is incredibly powerful.
Yeah.
Even within the banking world, do not overestimate the value of your product. It's your loyalty program is far more important to consumers because the value that it gives them is additional purchasing power. And a strong loyalty program drives behavior, and we proved that.
And I'm one of those people who went over to ASAP for a little bit as well. Well, I still do ASAP. But Jaco van Jaarsveld, thank you so much for this. This is only the beginning, by the way. And by the way, Jaco van Jaarsveld, he's the Chief Strategy and Innovation Officer at Experian. What a pivot indeed. And the one thing we want to do is run a series on data stories and insights. So if you're a CEO of a big business, you're the Chief Strategy Officer, you guys have strat for next year, or you always want to reassess. Strategy is not something which is, it's always fluid. And you're looking for access to real data that can make you make some really important decisions, but based on fact, then this is the way to go. But we'll tell you more about that. I want to thank you once again for tuning into Innovate Africa. The email address will pop up. If you want to get a hold of Jaco, then drop me an email. I'll connect you. And stay tuned, because I'll tell you when we're going to have face-to-face discussions with chief strategy officers, CEOs, and other C-suite people who have to make some really tough decisions in a very topsy-turvy market.